Hey everybody, how you doing? It's Uncle Bruce here, Stock Markets with Bruce. It is December the 16th, and we got about an hour and 20 minutes to go before we close for the day today. And I want to talk to you today about GameStop. The question on all people's minds would be, why don't GameStop shares go back to 200 bucks a piece? We had the shares had a really big run the last 3 months, and they climbed all the way up to 250 bucks twice in like a 2-3 week window. And then they backed off back to the 200 range again, and then back to the 180-90 range for a while. And now in the last week, they've backed off and hit a low of 129 just a few days ago. And the question now is, with such a huge sell off, with from 250 all the way down to 129, you think, well, would it be natural just to have a bounce back to the 200 level? And why isn't it happening? What's the story? What could be behind the stock sitting here at 143.71? That's where I'm showing it right now, down $4.88 today. A lot of reasons, but I'll tell you a couple of things that you have to keep in mind. The company had a lot of hype. The stock did anyway. A lot of stock hype up until last week when the company released their financials. There was a lot of anticipation for about 3 weeks prior to the earnings coming out that, well, early December 8th or so, they're going to bring out their numbers, and we could be in for a lovely surprise. We didn't get a lovely surprise. We just got kind of what a lot of us were expecting to get. Sales are better than last year, true, but no earnings yet. And there was even talk, well, their earnings are worse than last year. Well, in theory they are, but in reality they're not, because last year they got a tax credit, a COVID tax credit. This year they didn't. So you take the tax credit out of the picture, they're losing just as much money. And then other reports out there say the company is bleeding money away. It's just bleeding its money. They're losing so much money, it's just evaporating into the sky. And arguments were made that they had over almost $2 billion in cash, and now they've got $1.4 billion in cash. The reality actually is they're not bleeding money away. They're actually investing in their business. They have spent millions of dollars on their distribution center in York, Pennsylvania. Subsequently, millions more spent in Reno, Nevada for another distribution center. All the machinery, all the personnel, the hiring, the logistics. Then there's the millions and millions of dollars spent on developing new websites that they're working on, the new office in Seattle, the new office in Boston, and the new customer care center in Florida. So the company is not wasting money or bleeding money. They're investing in their business, their future business. What they're not doing is they're not adding a whole bunch of brick and mortar locations. That's one thing they are not doing, and I salute them for that. But the other thing that they're not doing, and this is why the shares aren't rebounding to the $180, $200 a share level, the one thing they're not doing is they're not talking. They're not talking. They are not. They're not allowing shareholders, existing shareholders, and potential shareholders, people on the sidelines who would jump into this stock if they felt, hey, now's the time. No one has a sense of urgency to want to be a shareholder right now of GameStop. There's no sense of oh, if I don't buy it today, it could open up at 180 tomorrow. Remember the old days? We'd close at one level and open $30 higher the next morning. Even if the company hadn't said anything, there would be just rumors everywhere. There are no rumors everywhere right now. That's the other thing that isn't happening. We don't have Wall Street Bets and Reddit and all these other forums talking up the incredible hype and possibility of GameStop. Everything has settled down, gotten calm and quiet. The excuses for massive management change, they're gone. The CEO, Sherman, is gone. He used to be the chairman of the board. All of his underlings, they're all gone. They've all been replaced with the new guy, Ryan Cohen, and he has put in his people. We've already had one turnover already. I think the CFO is already coming out. So we're now into the new management of the company, which is becoming the established management. And in a few more months, it'll be one full year that really these guys have been running the show, and they're not talking. I will admit there are times where I bet you can get more information on GameStop and what's going on. If you talk to the employees of a GameStop location, I bet you if you walked in there and talked to the manager and the kids working there, hey, what's happening? What's going on? What's the latest? And they'll tell you internal memos. They'll tell you, oh, we've been told to do this, we've been told to do that, or we're picking up this line, or we're bringing this in, you'll get that information. You're not going to get it from the company. The company is not talking at all. The philosophy seems to be, well, we don't want to say anything because we might give away trade secrets to our competitors. I'm thinking, well, there's a point to that to a degree, but there's also a point to keeping your shareholders updated on what you're up to. And you can't just have these periodic once every quarter phone calls where you read from a script on how you came to your third quarter projection, your third quarter financials or second quarter financials. You can't just read the income statement and then expect us to be happy and then nothing happened. And you can't have an annual meeting where it's a virtual annual meeting and you don't take questions from the audience. I mean, this is not really is not good for you. It's not good for you in the long run. My humble opinion, if the company were more proactive on letting us know tidbits of information, updates, just progress reports on how things are going, I think there would be more people who would want to become shareholders and fewer people who would want to not be shareholders anymore. They'll want to still stay shareholders. That combination of people not wanting to sell and more people wanting to get in will lift the price of the stock and or hold it here or bump it up. It would also negate dramatic down moves. It would minimize those, like a shock absorber in effect. But a company has to want to be a communicator to, or it isn't, and that's just the bottom line. The shares could easily go back to 200 a share at any time. They can go up $30, $40, $50 in a day. We all know this. We just don't see the excuse in front of anyone right now. No one has an excuse in front of them to say, I got to get in on this thing. This thing is in the low 140s, and I feel that in the next month or so, it's going to be back over 200 a share. I'm in. I'm in on this baby. Let's go. It's just not happening, and that's why the shares are not back to $200 a share. Another evidence of it not going back to 200 a share is the volumes, the daily volumes. As of right now, with about an hour and now 10 minutes to go in today's day, we have 1.64 million shares traded, 1,640,000. That is not enough volume to hold this market where it is or to even see an increase in the price. We really need 5 to 10 million shares a day and above that of buying interest to come in to move this market. It can move dramatically with that kind of volume. Yes, it can, because the total outstanding stock is 75 million shares. But there's always a turnover of stock going on. Day traders are in here, out of here, in here, out of here. But at the moment, without another couple of million shares of buying interest, the stock can't go higher. And the company doesn't give the buyers a reason to want to come in, the stock will go lower. My thought, too, is if the shares could go higher into the 180, 200 range, 220 range, from time to time, this company could, in effect, pull off stock sales where they could do sales of blocks of stock and raise another couple of $1 billion and put themselves in a position where they're sitting on $3.5 billion in cash. Not saying that they need the money. They're not losing that kind of money, but it gives them more money to invest into their business and or acquire other existing entities out there to add to their bottom line. Just a thought from my end. Anyway, that's the story why we're not reaching $200 a share. And so a lot of my viewers right now are writing call options against the stock. They're writing call options and they're making all kinds of money. They write calls at 150, 155, 160. The stock drops predictably. They buy the calls back, cash in, write new calls again, stock falls again, cash in. They're slowly but surely buying more GameStop with the money they're making or other stocks and or paying their bills. And writing call options has been a wonderful way to enhance the portfolio's return, because if you're just holding GameStop stock, you're not making any money, because in the last 3 months, 200 to 250, 200 to 250, now to 129, now to 142. Who's getting rich doing this? Option call writers are making the money, and that's where my viewers are coming in. If you want to know how to write options, Go to my website, stockmarketswithbruce.ca. Check the lessons out. The link is up here. Classes. There are 10 classes there. 10. Check them out. Learn how to write call options. Learn how options work. Understand how they deteriorate as they come into expiry and how you can take advantage of that deterioration to put money into your account. You should be paid to be a shareholder of any company that you hold, not just GameStop, all the stocks you have. You should be earning money on the stocks you own from call option writing. There's ways to do this. Anyway, thank you for joining me today. We'll keep you posted on what's going on. We'll talk to you next time. Bye for now.